Have you ever considered what would happen if you followed Warren Buffett's investment rules for a month? I tested his approach for 30 days. Let me share the impact on my finances, mindset, and investing habits. Hello, I'm Sam. Today, I'm taking on an authentic investment challenge, 30 days dedicated to Buffett's famous principles. No tricks, no shortcuts, just the essential strategies that helped him become one of the richest people globally. In this video, I will discuss my actual investments and stock selections, along with a few I decided against, how my perspective as an investor evolved, 5 Buffett principles that anyone can use, regardless of their experience level. Day 1. The setup. Present the Buffett Blueprint. Principle 1. Always invest in what you understand. Principle 2. Ensure you have a margin of safety. Principle 3. Adopt a long-term investment approach. Principle 4. Avoid debt and speculation. Principle 5. Stay patient while others are anxious. Outline the selection of a starting portfolio. On the first day, I assessed my watch list and eliminated anything I couldn't explain in a single sentence. Most tech stocks were excluded. After completing our first week, at the 8th day, we go for a deep dive and analysis daily research procedure. Each day, I dedicated 10 minutes to investigate company history, financials, and products. If I didn't understand the business, I chose not to invest. Margin of safety. I set price targets with a 25% buffer below analyst projections. Often, that meant exercising patience rather than buying, even when enthusiasm was high. Highlight a stock you chose not to invest in. I almost purchased XYZ but realized the business model was too complex. Now for the third week, let's build our portfolio. Reveal actual purchasing decisions. By day 15, my Buffett-endorsed portfolio featured Coca-Cola, Apple, and a local bank I often use. Stress the importance of long-term holding. Instead of frequent trading, I focused on positions I could hold for years, even during market fluctuations. Discuss personal urges to buy, sell, and how Buffett's principles help you resist hasty decisions. Now for the final week, which is at the day 30, let's check our results and key takeaways. Summarize monthly performance, profit, loss. After 30 days, here's the result. My funds didn't skyrocket, but my losses were minimal, even during market downturns. Reflect on key lessons learned. Grasping the business and keeping a margin of safety provided stability. Long-term thinking greatly enhanced my peace of mind. I spent less time worrying and more time conducting research. The challenge centered around building lasting habits, not seeking immediate wealth. If you're a beginner, Buffett's principles far outweigh the excitement of chasing trends or meme stocks. Are they exhilarating? Not really. Are they effective? Absolutely. Thinking about taking on a similar challenge? Feel free to share your questions and favorite investing principles in the comments. If you learned something valuable, like this video and subscribe for genuine finance content every week. See you in the next challenge.